Hey, Jar, I know you're on mute, but just wanted to say I'm ready to go here. All right, everyone. Sorry for a little delay here. I'm running the show solo today. Greg is out on the West Coast. I guess he's in Portland, drumming up some business. But no worries. We're going to have a great show here as well. A little bit abbreviated, but I'm going to walk you through really where you can find some of this information that Greg and I talk about every day. So, please feel free to ask some questions along the way here. But let's start things out talking about the bigger economy. So, the first place that I go to look for charts and information is this website here. It's called barchart.com. Let me maximize it, make it a little bigger. Barchart.com, you're going to have to deal with a little bit of advertising, but really not too bad at all. Actually, I made it too big. Back her down here. So all you have to do is type in what you're looking for up here. So we're going to look up WTI, which stands for West Texas Intermediate. Take a look at crude. And so this is a daily. Right here, there's a little drop down. You can change the duration of the chart. So what we'll use is daily. And if you use daily nearby, it always has the front month chart on there. So, the first thing I look at, I go back to February, the end of February, beginning of March is when things got a little crazy. We know geopolitically at that time, the Russian invasion happened, and we, all things considered, haven't gone anywhere since the initial move. We're, last trade here is right around $111. That's smack dab in the middle of this range. So, first couple things I look at when I see the chart, maybe there's a slight trend going higher, but it's kind of in a channel. So, all right, that's crude. We can look at what the stock market is doing. So, S&P. I look at the E-mini future S&P contract personally. And, this is going to correlate. Here is the end of February right here, beginning of March. We're obviously lower, but, all things considered, it's not that much from I guess we could back up a little bit. Let's make a look at a 1-year chart. The high water mark was on right at the beginning of the year, January 4th, and we had The high was 4,800. We're at 3,800, off 1,000, 20% off. I mean, yeah, nobody wants to lose 20% in the course of half a year. But considering everything that's going on, what I like to do when I look at a stock market, let's take a look at a 3 year. Now, that's a different story, right? So here is the bottom of, well, global pandemic is basically announced. We drop like a rock, and then just motor out of that. So when you consider where the bottom of that is 2,100, we're almost double. The stock market's almost double from where the bottom of the pandemic was, and even at the beginning of the pandemic, we're still above that. So, well, the stock market has definitely peeled back. Maybe it's not so bad. Here's a chart that I have a newfound interest in, and that is copper. So we'll look at some high grade copper, because I think copper is much like lumber. I mean, it is a building material. This is a 3 year range. And sure, copper saw some very explosive price action coming out of the pandemic. Let me go up a little bit. Here's the bottom of the pandemic. And, it went from 2,000 to 5,000. So, up double, what is that, 150%. Now, what I think is really interesting about copper is the last 6 months, but we'll put a year. Starting here in April, it really took a dive, bounced back a little bit, and then took another massive pullback. So let's highlight some of these dates. This is, well, we'll start back here. Beginning of March and mid-April. Now let's look at lumber. Taking a look at lumber, let's go to the beginning of March, which is right over here. Starts its fall, beginning of April, mid-April, right about here. Takes another fall. So what I'm seeing here is copper's actually potentially leading lumber by just a little bit. And if we back lumber up to that 3 year range, this is the beginning of the pandemic. While the volatility, the swings are definitely more drastic in lumber. You can still see, though, that at this last part here, lumber and copper seem to be moving pretty similarly. So if you want to take a look at these charts, go to barchart.com. Now I'm going to take a little twist here, and we're going to talk about why copper and lumber might be moving together. And I think it has a lot to do with, I think it has everything to do with China. So Chinese lumber imports on a slight downward. So for the first 5 months, China received 3% more from its major supplier, Russia, than in the same period. But this isn't the one I want to show you. Let me shrink this down a little bit. So as far as China goes, the country that they get the most lumber, distinguish lumber here, not logs, but lumber, is the Russian Federation by a wide margin. The next biggest is Canada. And, I'm looking for the U.S., You don't even see the U.S. The U.S. is way down here. Once again, this is lumber only, not logs. So they get from 80%, or a factor of 8 more amount, 8 times greater from Russia than China. You add all of the China, Finland, Sweden, basically everyone together, and it's only about 20%, maybe 25% of what they get from Russia. So first thing you want to look at here, you go, oh, all right, China took just slight downward. Where was the, let's look down here. So they did 7 million cubes in 2021. They did 6.7 here in 2022. All right, now we're going to go to logs. This is the big deal, in my opinion. 40% decrease in softwood log imports. So Chinese softwood log imports fell by 7.9 million cubes. That doesn't really mean anything to me. But let's look at where they get their logs from. Number one, they get them from New Zealand by a wide margin, then Germany. Now here the United States pops in ahead of Canada. That's because in Canada, they have a policy that before they sell a log offshore, they have to offer it to a domestic producer. I believe that's how it reads. But basically, the reality is the United States exports more logs, and more of the wood is coming off of private, more of the logs are coming off of private timberland. Yeah, the other people in this chart aren't much to speak of, but you also see Germany here. And look at the massive decrease in log imports from Germany going to China. Now, one of the names you don't see on this list is the Russian Federation. That's because the Soviet Union or Russia will not export logs. They will only export lumber. Okay, so what's happening in China? Well, China had the COVID lockdowns. So really, they put a massive restriction on their economy. They, which is one of the reasons that we have inflation here in the United States, is because China is just not making as much stuff as they used to. Hence the supply chain issues. I believe that's all going to change. It's not going to happen overnight, but I do believe it's going to change in the next probably 6 to 12 months. But anyway, back in around 2010, I believe, when from 2010 on, China was the influencer in our market. So I always like to keep an eye on what's happening over there. And what I could see happen potentially is as their COVID restrictions ease and their economy starts to kind of domestically pick back up, because lumber going into China is for domestic consumption, obviously in their construction. It could be that we see these logs that were leaving the United States for China and Germany for China, that could pick back up. So anyway, I'm going to keep an eye on what's going on with the log import or exports with regards to lumber prices. But I thought it was interesting what was happening in China. All right, we're going to get rid of this now. And so we know if you want to look at charts, you go to barchart.com. It's pretty intuitive how to look around. If you want to find out about volume and open interest, these are things that Greg and I look at regularly. You want to go take a look at the CME group. So here is, and I'm going to show you exactly how you find this. Let's see if I can back this up one more. So when you get to the CME group, this is their page, cmegroup.com. There's a little spyglass here, or looking glass. You click on that, simply touch in or type in lumber, and you can get random length lumber future quotes. And this takes you to the random length page. Now, what you're looking at here, these are 10-minute delayed futures quotes. So, how far off are they? I have live quotes on this other screen. Let's say the last trade in July was 6:15. Here they're showing the last trade in July was 6:11. No, I'm sorry, it was 6:20. So they're slightly behind. Not bad. The bar across the top here is where you can start to dig deeper into some of this information. So first thing you can go, look at settlements. which actually shows on the front page too. But volume and open interest. They do a really nice job of showing where, so the light blue line here is the open interest, and the bars are the daily volume. Then if you scroll down, you can see the open interest by contract and what the volume was the day before, like what type of trade. So in July, yesterday, there were 88 trades on the Globex platform, but the total volume was 94 because there were 6, which fall in this case, exchange for physical, EFPs. I think it's kind of interesting here. You can see EFRs, which are exchange for risk. You can see EFS, which is exchange for similar. Exchange for swap. Oops. Or trade at settlement. I don't believe we have that option in lumber. And of course, you can see block trades. But this is all free, and this is all at your disposal. Total volume here yesterday was 220, and now you're going to see the change in open interest from 2,300 down to it went up by 3. So Greg and I have been talking for quite a while. Open interest has been really pretty flat. I mean, there's a slight uptick, but really pretty flat. And as far as volume goes, there hasn't been anything too significant in volume. You look back on, what is this, the 21st, there was a pretty big day. But now let's go take a look at, sorry about that. Let's go take a look at the Commodity Futures Trading Commission, the CFTC. When we talk about the CFTC report, it's put out by this is a government agency. And what we look under is right here, market data, economic analysis. So what we're looking is Commitment of Traders report, which is the second one down. Click on the Commitment of Traders report. And you scroll to this part, and lumber falls under metals and others. Now, there's 4 reports you can look at. Long format, which I don't look at. I always look at short format. And you can look at it with just futures contracts or a combined futures and options. I actually prefer the combined futures and options. I did want to show. Oh, I know. I'm sorry. I got it on this other. Oh, no. Where did it go? Where'd it go? But I was going to show the difference between the two. I might have. Give me a second. I don't know what I did with it. Too many screens here, evidently. Well, okay, I don't have it up here anymore. But the difference between the two is that an option position will have inherently not a full futures tied to it, but it could be worth 50% of a futures. That's actually for a much bigger topic. We'll cover that in a little later topic, a later date. All right, we're going to make this bigger. So first thing you see, palladium, platinum, silver. We're going to keep scrolling down until we find lumber. There's our good friend lumber right here. Okay, so what's going on in lumber? Well, we remember this is combined positions as of the 21st of June, which was the previous Tuesday. So from the previous report, the short position by the industry, which is the industry meaning a lumber mill, some traders who would hedge their inventory, that would fall under here. It's basically people involved in the lumber industry. So we've seen actually a pretty significant pullback in the short position. And this makes sense because we did have a bounce in lumber futures. So you could see that people were covering their short hedges. Open interest in the long positions went up. And I think you're seeing that the market pulled back. Some people would like to say it bottomed. And there was some definite covering of business, of, sold business by retail lumber dealers, by truss, component manufacturers. So it's not surprising. We see a jump in the open interest of the producers and a decline in the hedge or the short position of the producers. I'm sorry, not the longs is probably not producers. I highly doubt a lumber mill is getting long. So then, some other things that jump out at me, swap dealers. That's interesting. Why would they jump 122 new short positions? I'm not sure. That's kind of an interesting one. Then we look over here, managed money, 244 new short positions. So there's some disagreement going on out there right now. This is non-industry type people, financial people are getting short this market. Producers have lifted their hedge, which essentially is getting less short. In my opinion, it's kind of like getting long. And the industry is getting long. So that's really interesting. Who's going to be right here? The short interest increased by 366 contracts. Where did that come from? Well, other reportables, down 73, down 66. So what is that? It's about 140. That's 280 of the 360. So essentially, other reportables is generally small traders, so it could be individuals from the industry. But it sounds like people involved in lumber think we're bottomed, and people who are looking at it from the outside maybe have a bigger global perspective on overall market, are looking at the lumber market and saying, wow, this housing market's going to slow down. Lumber prices are historically overvalued. But what that does say is this adds to the potential for open interest, because when one of these sides decides they're wrong, the short or the long, they'll exit that position and it will exasperate the move. So just kind of going back, you go to the CFTC website, which is cftc.gov. And it's under market data and economic analysis. All right, let's go back and let's take a closer look at the actual lumber chart. This is our 3-year chart. We can start way back out, take a look. You could take and draw a long-term trend line, which there's some really cool tools on the sides here. You can use trend line. So I click on this point. Oh, I got to click and hold, I think. What happened to my trend line? There we go. So, you could make the argument that we had a trend line here, and that maybe we're bouncing and holding on this trend line. So now let's go into a 1-year chart. Okay. Here's your 1-year chart. Ironically, that we bottomed out last year on August 20th. Not that far off, maybe 2 months out here. Let's go in a little bit closer. Let's go into our 6-month. Now here you could easily draw another trend line if we wanted. Let's start here. Oops. I think that's a legit trend line. I think we can do trend channels too. Oh, these are the Fibonacci. Here we go, trend channel. What's this going to do? Oh, there we go. So, I'm glad I just did this. So this was a trend channel from March 4th to, well, it broke out basically April 21st. We were in this channel going lower. All of a sudden, we break out and go sideways. Now you could make the argument that, delete the trend channel. Let me get rid of this trend line. Maybe we just are breaking out of a new trend channel. Ooh. Sorry. So here was this channel. Lasted about the same amount of time. Maybe we broke out of it. I don't know. But these are some really cool features you can draw along the sides. I want to change the way this chart looks because I like to use bar, or where is chart type? Oh, here we go. I like to use candlesticks. I think these charts look better to me because obviously a red bar on these charts means it opened and the close was lower than the open. And in downward trends, that's generally what you see. And if you kind of take a look, there's a lot of red going down here. But I'm going to bump this into a 3-month. Let's see what's going on. All right, we got our trend channel. We broke. And wow. So what's the date on this? June 14th. So, what is that? Just over a week ago. No, looking like 2 weeks ago. I'm sorry. We hit this bottom. We know a lot of wood was sold in the cash market. It seems like we're kind of in a consumption period right now. If this was really an uptrend, what I would have liked to seen is for us to have continued on already. I think that the longer we go sideways, the more likely I see that this could potentially be, moving us into a sideways to downward trend. The couple things I look at though. So we rallied. We had a pretty nice pullback here on the 23rd. And from that point, we really haven't gone back and tested that low. And for the first time today, we made a higher high. What will show me is if we finish the day strong, then my target is going to be this high right here, which is 612.60. And this is July. So I think it's important. We got to let July go. Let's take a look at September contract. And what does the September contract tell us? Well, we have a lot of the similar, kind of a down channel. Here, what I'm looking for right now is the target of high of 612.60. Wow, they had the same exact high. That's kind of interesting. On the 21st. Oh, of course they were trading even money back then. The last thing I want to take a look at though are the spread markets, because look, the one thing we know is here is this is the July SEP spread. And on the 10th of January, it bottomed out. It was in negative territory at that point. And, here is the 16th of June. It's trading even money. And it's broken out again today. So, this is short covering. So it started on the 10th of June, which corresponds with, well, where's the 10th of June? Right here. Oh, wow. So it was still while the market was going lower. But when on the 14th of June, when this market bottomed, that was right here. So actually the spread market predicted a bit of the turn in the, I'm sorry, this is September. I need to be over here. Yeah. The spread market predicted a little bit of that turn. It was a day ahead. But what we're seeing here is the July contract is, ripping a bit higher or moving up much faster than the SEP contract. But let's take a look at another one, which is we're going to take a look at the SEP. NOV spread. And I wish I knew how to make this bigger. I apologize that it's so small. No. Don't know how to make it bigger. So what I find interesting, here's the SEP to NOV spread. And this spread has not moved higher versus the July to SEP. Back to the SEP to NOV. All right. So what is that SEP to NOV spread telling us? Well, it's telling us there's probably a bunch of uncertainty out in that September, November timeframe. All right. That's enough analysis for the day. So to kind of wrap things up, we looked at China. China could be coming out of its slumber, out of the COVID-induced slowdown. Will that affect lumber prices? The other thing, July goes no limit starting on Friday. So when July goes into the expiration month, which is the month of July, it expires on the 15th. It goes no limit. So July is becoming less and less relevant. But my biggest takeaway from today is that the industry is bullish and the financial market is bearish on lumber. When you see polar opposites like that, generally something moves out of there. For the last 2 years, the lumber market's been correct. The lumber industry was correct on the move. So take that with a grain of salt. But we definitely see some divergence in the players in the market. All right. So next week, Greg will be back. We'll have lots to talk about after the holiday weekend. Have a safe holiday. And if you have any questions, feel free to reach out to us at any time. Take care.